You're watching Resource Intelligence, and we are still live at the PDAC, and my guest right now is Brent Cook from Exploration Insights. Thanks for coming by.
Glad to be here.
So Brent, you're very knowledgeable about prospect generator companies and the prospect generator model. Can you just explain first, in a nutshell, what does that mean? What is a prospect generator company?
The prospect generator model is actually it's a business model in the exploration business. And what it does, it recognizes the very, very low odds of success in discovering an economic deposit on any particular project. I mean, in reality, there's 10,000 projects out there for prospects, and very few of those are going to be, less than 1% are going to become economic deposits. So what these companies following this model do is they generate ideas and then vend out the heavy spending to it, the drilling and that sort of thing, to someone else to take the really high risk and high dollars, and they maintain a portion of that and move on and look for the next one. So they're offsetting the really high risk on somebody else.
So these guys, and we can talk about some of the companies too to give examples, but they're basically experts in the geological field. They can identify targets that are more likely to become a deposit, and then find a partner to drill that out, and they move on to the next one and keep finding these potential projects.
Precisely. I think from my experience, most of the companies that follow the prospect generator model are good geologists, and they understand the low odds of success. And so in order not to dilute the shareholders, which is them, by continually raising money to drill properties that normally don't make it, they offset that cost and that risk to somebody else and go and generate another target until things change.
One that comes to mind right away is Almaden. They've done very well. Their share price is exceptionally high considering the stage of their projects, and I think that reflects the trust that investors have in their ability to find a project that will become a mine.
That's a really good example. It's actually in my portfolio, in a newsletter.
Almaden, yeah.
Almaden is. That company's been around for in the order of, 15 years. And during that whole period, they've only got 54 million shares out, yet they've had over $50 million spent on their projects by other people. Yeah. And they've had some successes, but not a lot. And then just last year, they come up with a project that kept getting better. Each time they went and did more and more work, it got better. And so they took it upon themselves to drill this one. So it took them 12 years to find the one that they're going to drill, and they've drilled it and had success. And when that happened, they've, as shareholders, we're sitting there with 54 million shares out and what looks like a major discovery.
So they haven't had to dilute the company very much, but they've brought on a lot of partners, and now they've found something that's a winner, looks like a winner, and they're moving along themselves.
Yeah, they've been able to wait until they found the perfect one to go after with themselves.
Okay, well that establishes the prospect generator. You're also an expert in, you're a geologist, and you're an expert in early stage projects. Let's talk about how investors can assess these projects, whether they're just rocks in a field or outcrops or whatever it may be.
Yeah, it's very critical, and this is what I really do in my newsletters, turn the rocks into money. To do that, whenever I go on a field trip, and I'm on the road half the time now, as soon as I get to a property and look at a rock and start thinking about what this is, it's about, all right, what's it going to cost to mine this? And what's the topography like? What's the situation like? How are you going to get the ore out of the rock? How much is that going to cost? What's the capital cost? All those things you've got to build in the back of your mind, or at least I do, an idea of what it's going to cost to develop and build this versus what's in the rock. And that's really the first thing that you have to think about from day one. Otherwise, you don't know how to judge your results.
So do you want, from a very early stage, obviously grade is king, they often say. As soon as you can get grades, that's when you can really start to make an evaluation. Knowing that gold trades at $1,400 an ounce or whatever the metal is, that'll give you a sense. Is there any way to tell before that? What sort of indicators would you look for in an early stage project and the company that owns it that they could be successful?
There's various geologic models and different mine deposit types. And when I go to an area, for instance, I'll get a sense of what that deposit style is, what they're looking for, and what, if they're successful, what it's going to be worth. and then what it's going to cost to bring it to that stage. So you can do that just by soil samples, alteration studies, geologic mapping. For instance, there's another prospect generator company, Eurasian Minerals. We've got a joint venture with Newmont in Haiti, and they've found what looks like a massive unexplored porphyry copper system. Hasn't been drilled, but we know that if the grade works, it's a big enough system. This could be a world-class deposit.
Mm-hmm.
So without even drilling a hole, I've got a concept of what I need to see in terms of grade to make this work.
Let's talk about a couple companies that you're looking at these days in that prospect generator level.
Well, we just mentioned Eurasian Minerals. That's quite an amazing company. They've got projects all over the world now being worked by various partners. They're involved with Antofagasta in Sweden.
Huge company.
Yeah, big major mining company. And they're exploring Sweden on Eurasian's ground, and they're spending all the money. If Antofagasta finds what they're looking for, which is 100+ million ton iron oxide copper gold deposit, Eurasian's carried 30% on that. 30% of something that big is quite, that's great.
Mm-hmm.
At no cost to them. Same thing in Haiti. They've got some projects in the States that are looking quite well. They've got projects in Turkey being drilled by Centerra, and they just picked up a whole new potential gold belt in Australia that they'll bring somebody into.
This is not a penny stock. I'm pulling them up here.
It's done well.
Yeah.
They've got $40-odd million in the bank, and we'll see. I forget how much money spent on their projects, but quite a few.
Yeah, 41 million shares out. So it's and it's growing. You can see based on their chart. How much further do you think Eurasian would have on the upside in the near future?
Well, I think as a business model, it's you're looking at flatline. But if a discovery is made in Sweden, Haiti, Australia, that's of this size that they're looking for, this could do quite well.
Okay.
And I'm not going to say how much more. But, 30% of a major copper deposit is worth quite a bit.
Yeah. Okay. Let's look at one more before we sign off.
Riverside, another company that follows this model, much smaller company, run by a very energetic young fella, John Mark Stoddy. They're active in Mexico and the States. They've got, I hope I get this right, 7 projects being worked by other people. They've got strategic alliances. They've just vended out their low-grade gold deposit in Arizona to another group and got a lot of shares for that. That's another company that's following that model.
Okay, a lot of projects.
Yeah.
Lots of them in the drilling stage too, I see. And again, a similar movement in their stock price up to $1.25.
Yeah. Well, it's going to be hard to find a stock price that's gone down.
Yeah, these days.
This year.
Yeah, something bad has to happen. That's right. But it's solid growth. It looks good for a prospect generator as well.
Yeah.
Okay, Brent, thanks for coming in and talking to us today.
Thank you.
Okay, time. It's Brent Cook from Exploration Insights.